So we were doing receivables management, okay, and uh, in receivables we saw that we have to calculate the all the benefits, okay, and we have to deduct what all the extra cost, okay. There were two approaches. One was what, variable cost approach, another one total cost or COGS approach, correct. In variable cost approach, I believe that the investment is only variable cost, but in COGS I take fixed cost also into consideration as a part of investment, right. Then on that investment I calculate the opportunity cost, correct. So that is what we did. We have seen where the policy is being implemented across the firm, means to all the customers. Then we saw in one of the firm where customer wise analysis have been done, correct. uh, then what we did extra, anything else? That's it, right. Till this point what we have seen is only the when the credit period it increases, correct. Company may have a policy na, means may think of reducing the average collection period. Are you understanding? Okay, that is also possible. Okay, so now we will learn that. Okay, so come to in your book. Before that, before doing that means reduction in average collection period, let's do some other questions. Okay, then we will go to that. Come to question number 85. Question number 85. Page number is 201. Page number is 201. See, they have given you the accounts. Those are the accounts number. Okay, and they have given you the amount in rupees. Days outstanding in days means for how many days it is outstanding, and average payment period historically. Okay, so the account number 74, the amount outstanding is 25,000, and it's the actually the credit period was for 15 days. Okay, but on an average historically we have seen this customer pays us, okay, in how many days? In 20 days. Is it clear? Okay, same way 91 account number customer 91, amount is 9,000. Okay, days outstanding is 45, correct. We have given him 45 days credit, and the average payment what we receive from him is 60 days. So credit period and collection period are two different things. Credit period is what you allow to the customers. Average collection period is in how many days on an average he pays to us. Okay, so there are different accounts they have given. They have given you the total 1,08,000. Next, see what is given. A bank is analyzing the receivables. A bank is analyzing the receivables of Jackson and Company. Okay, Jackson Company to in order to identify acceptable collateral for a short-term loan. Acceptable collateral for a short-term loan means based on this data, they will give you a short-term loan. Okay, based on this means these data will form what? Collateral. The company's credit policy is 2 by 10 net 30. Can anybody explain what is this 2 by 10 net 30? Can anybody explain what is this 2 by 10 net 30? No. Please write in your notes. Please write in your notes. 2 by 10 net 30. This is 2% cash discount. 2% cash discount if payment is made within 10 days. Within 10 days. This is called credit term. This is called what? Credit term. Okay, 2 by 10 net 30 means 2% cash discount if the payment is made within 10 days of the sale. This is credit period. What does this mean? 2 by 10 net 30 means what? 2% cash discount if you pay within 10 days to me. Otherwise, you can enjoy a credit period of how many days? 30 days. Is it clear? Okay, please write this. Coming back to the question. The bank lends 80%, okay, on accounts where the customers are not currently overdue. Means bank has kept the condition. What condition? Wherever the customers are not overdue and where the average payment period does not exceed 10 days past the net period. 10 days past the net period, okay, means there they will lend you how much? The 80% of that. Okay, what they mean to say, see here, coming back to the table. Where the customers are not currently overdue and where the average payment does not exceed 10 days, okay, past their credit period. Okay, see, now you tell me in this, see, credit period is how many days? Credit period is how many days? 30 days. Credit period what given in the question is how many days? 30 days. Company what it does, you know, it gives this account, this customer a credit period of 15 days. Is it clear? Understood? To this customer, how much? 45 days credit. Credit period for how many days? 45 days. Here also they are giving more than 30 days. Okay. So these two accounts, which two accounts? These two accounts. Account number what? Account number 91 and account number 114. Okay. 114. These people now they have a credit period. They have a credit period which is overdue. Currently overdue means what? Generally what is more than 30 days. Generally what happens? See what the bank says, whatever is your credit period, the amount should not be overdue than that. Means you should not give credit period more than that. Please understand. Okay, so my days are 30 days, what the company's credit policy is. To give credit of for 30 days. But these two accounts, okay, they are overdue. They are taking more than 30 days to pay. Okay, more than 30 days to pay. So the bank is saying we will not consider this as collateral. Please understand. We will not consider this as collateral. Is it clear? Okay. So on this you will not get a loan. Fine everybody? Understood? Next, I am reading it. See the language. See, where the customers are not currently overdue. And what's next? And where the average payment period does not exceed net 10 days past the, sorry, does not exceed 10 days past the net period. Okay. Average payment period should not pass. How many days? Should not exceed how many days? 10 days past the net period. Net period is 30. So check. 30 plus 10 is how much? 40. 30 plus 10 is how much? 40. Here, which are the accounts which are taking on an average more than 40 days to pay? Please tell. 91 first, then 114, 114, correct. Then 123. Please understand. Here what you have to see. Here it should not be more than 30 days. Okay. Here what you should see. It should not be more than 40 days. Is it clear? Means bank says if you're giving more credit period na, more than 30 days against the company's credit policy, then we will not consider that debtor as collateral. We will not give loan on that. And those who are paying, means if you're giving credit period of 30 days, 10 days past, 10 till 40 days, it's okay. But who are not paying you by 40 days, we will not consider those debtors also as collateral. Is it clear? Okay. See a final question. A schedule of Jackson's receivable have been prepared. How much will the bank lend? Okay, on pledge of receivables if bank uses 10% allowance for cash discount and returns. Now what they are saying, that out of this good accounts now which they will consider as collateral, out of that also 10%, they means the bank considers that 10% of this debtors, okay, this debtors, they will be given cash discount or the goods will be returned by them. Array, is it clear what I'm saying? Which accounts are selected? Which accounts are selected? Account number 74. Which account is selected? Account number 74, 107, 108 and 116. These accounts are selected as collateral. Why? Because they are satisfying the bank's condition. Correct, na? So these accounts will be selected. When I will select this, whatever is the amount out of this, bank believes that out of this 10% will be what? Will be the cash discount. Either the company will cash discount, then they will pay, or there will be returns. So those are not returns, na? Right? And what is the next condition? They will lend how much? They will lend 80%. They will lend how much? 80%. Is it clear, guys? Simple question. 10 marks, 10 marks. Now if it comes now, it will come for in the first question, 5 marks. Okay, compulsory. So let's do it. How to present? So overall, what we have to calculate, how much the bank will lend you. What we have to calculate, how much the bank will lend you. Yes, that's what I'm saying. Credit net period means credit period, right? Right. Huh. Write one self note first. Write one self note. You tell me logically for calculating the investment I'm saying, not related to this question. So the calculation of the investment, what we used to calculate in the previous sums and all, credit period is given, average collection period is given. Okay, which you will use? Collection period. Credit period is given by the company, but your investment is blocked for how many days? That is for collection period, na? For that many days. Are you understanding? Collection period means what? Customer pays within 40 days. That means your fund is blocked for 40 days. Company's policy may be giving 20 days credit. Are you understanding? But that is if nothing is given, then credit period itself is what? Collection period. Okay. So that is what we have done in one or two sums. Okay. But if both comes, average collection period should be taken. Okay. Write a self note. I'm not writing. Please write self note. This for you. In question. In question. In case. In case. Both. In case. Both. 2 by 10. 2 by 10. Net 30. 2 by 10. Net 30. You know how to write 2 oblique 10 net 30. and average collection period, and average collection period, say 45 days, say 45 days, both are given, say 45 days, both are given, say 45 days, both are given. To calculate debtors balance, to calculate debtors balance, 45 days should be considered. 45 days should be considered. That is average collection period. 45 days should be considered. That is average collection period. Average collection period. Okay. Right. Solution. We are starting with the solution. If debtors credit period, if debtors credit period is 30 days, analysis, analysis of receivables of Jackson Company, of Jackson Company, please make a table. Account number, account, let us give it A. Amount, let us give it B. Okay. Account, then amount, second column. Okay. 74 is selected, 107 is selected, 108 is selected, 116 is selected, amount is 25,000, 11,500, 2,300, 29,000. Okay. Please understand, the bank will lend how much? The bank will on this make a provision for 10% cash discount and returns, correct? So they will consider good as how much? 90%. Are you understanding? Okay. C is equals to B multiplied by 90%. B multiplied by 90%. Please give me the figures. 22,500 first one. 10,350. 2,070. 26,100. Now these are good account receivable. Out of this, bank will give lend me how much? 80%. Very easy question. 80%. D is equals to C multiplied by 80%. 18,000. 8,280. 1656, 20,880. Thank you. Total. Total. 48,816. So this is the amount what bank will lend. Okay. This is the amount what bank will lend. Right. Then right below the table. Obviously, if the question comes for 5 marks, something you should write now. So write analysis, analysis of receivables, analysis of receivables. Okay. Of Jackson company, company, analysis of receivables of Jackson company by bank, by bank, in order, in order to identify, in order to identify, in order to identify the acceptable collateral, acceptable collateral for short term loan, for short term loan, acceptable collateral for short term loan. Right. First, Jackson Company Limited, Jackson Company Limited, Limiteds, Jackson Company Limited's credit policy, Jackson Company Limited's credit policy is 2 by 10, net 30, net 30. Jackson Company Limited's credit policy is 2 by 10, net 30. Full stop. Continue. Bank lends, bank lends 80%, 80% on account, on account where the customers, where the customers are not currently, are not currently overdue, are not currently overdue, and where the, and where the average payment, average payment period, period, average payment period does not exceed, does not exceed 10 days past, 10 days past the net period, 10 days past the net period, that is 30 days. What is the net period? 30 days. Full stop, full stop. Para change from the, from the schedule, from the schedule of receivables, from the schedule of receivables of Jackson, of Jackson company, company, account number, account number. What was the account? 91 and 114. 91 and 114. Check 91 and 114. Okay. Are currently overdue. Are currently overdue. These were overdues. Overdues means company's policy is what? 30 days. But company gives them credit period of how much? 45 days. 45 and whatever it is. Okay. So it's overdue. and account number and account number 123, 123, average payment period 123 's average payment period exceeds exceeds 40 days, exceeds 40 days, full stop. Para change. Hence hence account number hence account number 91 comma 114 and 123 are 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 eliminated, full stop, full stop. Therefore selected therefore selected accounts are, please tell me the other figures. First is 74, I think, comma 107 comma 108 and 116, full stop, and 116. For this much you will get 5 marks. I hope it will come for 5 marks. Okay, this is another type of sum. Okay, let's continue. Done. Come to question number. One more different type of sum. See, question number 89. Very interesting sum. Question number 89. See the question. A firm is considering offering 30 days credit to its customers. Okay, the firm likes to charge them an annualized rate of 24%. The firm wants to structure the credit terms of cash discount for immediate payment. How much the discount rate have to be? This sum also can come. Question number 1, compulsory. Okay, for 5 marks. Any idea? Can you give me the insights how to do this? Firm is considering what? 30 days credit to its customer. Please understand. Firm wants to charge them annualized rate of 24%. Whenever, listen carefully. Whenever you give the credit period now, obviously, please understand, obviously you will be charging interest to them. See, if I am selling some goods, I should get the prompt payment, right? I should get the prompt payment. But what the business people do, if they are giving you 30 days credit period, now they will charge interest on that, and your invoice will be accordingly given to you. Now what these people want to do, they want to charge 24% annualized rate. Okay, and if someone pays it early now, see, the firm wants to structure the credit in terms of cash discount for immediate payment. So how much should be the discount rate? Discount rate have to be 2%. A general guess is 2%. Why 2%? One by one. One by one. Yeah. Correct. What he said is generally a layman who doesn't have the knowledge, what means basic knowledge of finance, what he will say, 2% annualized. So for 30 days it comes to 2. So I will charge you for 30 days 2%, or if you pay me early, I will give you 2% cash discount. Correct. Anything else? Yes. Sam was saying something. Acha, okay, same thing. So let me tell you something. Listen, the question is clear, right? Question number 89. Right, given 30 days credit. What is given? 30 days credit is given. Okay. Rate 24% interest rate. You have to calculate cash discount rate. Cash discount rate. Okay. Now, first thing, when you are calculating these things, see, when you take 1 by 12 na, it is 30 by 360. When you take 1 by 12 na, it is what? 30 by 360. Because, please understand, because because it is interest. Correct na? Obviously, 5 days will also be considered. Are you understanding? 365 days, not 360 days. 5 days becomes important. Have you understood what I'm saying? Like these people, what they did, they calculated 24%. Can you assume 360 days? That is what I'm saying. You can't. When interest you are calculating, you can't assume 360 days. You have to take 365 because 5 days is important. Okay. So that means see, interest at the rate 24%, okay, per annum for a period of 30 days is equals to 0.24 multiplied by 30. I will take 365 to get the precise answer. Okay. Now when they did 1 by 12 na, what they assumed? When you take 1 by 12, it's 30 by 360. Clear? But it should be 30 by 365. How much it is? 097. Please give me more figures. Decimals 226, or I can say 1.9726% per month. Is it clear? Okay, listen carefully. Very important part. Very important part. See, if the today's principle is 1, please understand what I'm saying. Please. Very important part. Time value of money. I'm writing the solution. Okay, then I will explain. Hence, please understand. The principle, like let's say of rupee 1, like if I'm selling you 1 rupee goods, 1 rupee goods, including it will means after 1 month, okay, including interest, it will become 1.019726. Correct? Hence the principle of rupee 1 after 1 month with interest of 30 days will become is equals to rupees 1.019726. I hope this is clear. Anybody has a doubt in this? 1 rupee plus the interest on 1 rupee. On 1 rupee, how much? 0. The 1.9726. I'm not showing it. Clear? Okay. Understood? 1.07. So this much, please understand. This much I should get what? This much I should get from you after 1 month. Do you agree? But cash discount is given today na. So I will calculate present value of 1.019726. That present value, is it clear? That present value, okay, that much you should pay me today. Do you agree? Right? 1 rupee goods if I sell you, on that I want to charge you interest. So this is the amount due on your account. Correct? If today you are going to pay me how much? I will take what? Present value. The present value as on today, present value you take how 1 upon, correct na? Present value as on today will be equals to 1 upon 1.019726. Reciprocal, those who have not understood, for them future value upon, please understand, 1 plus I raised to n will give me present value, yes or no? Please understand. And 1 upon 1 plus I raised to n was called what? Was called what? PVIF. PVIF, please understand, PVIF. Whatever was the factor we used to get na, 0.6209. Whatever the factor we used to get, 0.620 now, something like that. Okay, what was that? That was the present value of rupee 1. Do you agree? Present value of rupee 1 as on today. PVIF is what? Present value at certain rate for a certain period. Is it clear? Correct now? That factor we used to multiply with what? This factor we used to multiply with what? Whatever is the future value amount. If for 1 rupee this much, for 1 lakh it is how much? So 1 lakh multiplied by PVIF. So we used to get present value of 1 lakh. Correct? Yes or no? So that means, yes, to calculate the present value, I will do 1 upon 1.019726. Okay? Okay. So next, listen. So present value, give me the present value, how much? 0.9806. 9806. One more, is there any digits further? 6 digits at least. 5, 5, 5, 5, 5, 5, 6, whatever it is. Okay? Understood. So listen. 1 minus 0.98. You were about to pay me 1 rupee. Instead of you are paying me how much? 0.980656 is equals to 0.01934 is what? Is cash discount. Is what? Cash discount. Understood? That is 1.93%. 1.93%. Any problem? Technical, very technical question. I'll explain again. Listen. Copy. Okay. So should I explain once again? Listen. See. Now it will be easy for you. See, I wanted to charge how much? 24% annualized. Please understand, very easy question. Okay. So for 30 days, how much will be the interest? That is 1.9726. Correct. So if the principal is 1 rupee, if the principal is 1 rupee, I should get after 1 month how much? 1.019726. Correct. 1.019726 I should get after 1 month. But in cash discount, he will pay me today, na? He will pay me today. So I will calculate the present value. So present value is how much? 0.980656. Understood? So instead of 1, he is paying me how much? 0.980656. Correct? So what is the discount? This is the discount. If I calculate in percentage form, it will be 1.934. Done? Easy? Any question? Is it difficult? Come to 76. Check 76. Have we done this? No. This is not done. First time after tax returns will be required rate of return is given. So how to deal with that? Okay, how to deal with that? Every sum is different. Variety. A group of new customers will with 10% risk of non-payment. With 10% risk of non-payment means 10% bad debts. Okay. Desire to establish business connections with you. Okay. They want to have a deal with you. This group would require 1.5 month of credit and is likely to increase your sales by 60,000 per annum. So how much is the incremental sales? 60,000 per annum. Correct. Production admin overheads expense to 80% of the sales. What is this? Cost. Correct. Can I say 20% is contribution? Loosely. 20% profit. You are required to pay the income tax. How much? 50%. Should you accept the offer if the required rate of return is 40% after tax? The after tax is given. Till this point, nothing was mentioned. Okay, so we used to always, tax was not given. Here the income tax is given. Required rate of return is also after tax. Also state the degree of risk of non-payment that would be willing to assume if the required rate of return after tax is 30%, 20%. Leave that second part. Let us concentrate on first part. Okay. So let us concentrate on the first part. Okay. Listen. So what they have given? Additional sales. Okay. They have given us the tax. They have given us the cost proportion. They have given us the required rate of return is 40% after tax. Okay. So how we will solve the sum? I will write question number is what? 76. Calculation of returns. What is the additional sales? Extra sales 60,000 minus what is the additional cost? 80%. So 80% of 60,000 is 48,000. So can I say my additional contribution is 12,000? Correct. What was the bad debts? 10%. 10% on what? 60,000. So it will be 6,000. 60,000 into 10%, right? So I will call this, listen, I will not call net contribution. I will call this additional PBT, profit before tax, because tax is given. So can I say this is 6,000 PBT minus tax at the rate what? 50%. 40 or 50? 50. So tax rate is 3,000. Tax amount is 3,000. So PAT is how much? 3,000. Please understand. Is it clear? Till here, no problem. Right now? Now, please understand. Increase in debtors balance. How I will calculate increase? Increase in debtors balance. 60,000 is the amount multiplied by how many months credit? 1.5. Check. 1.5 divided by 12. Answer. 7,500. Investment in debtors. This is selling figure, sales figure na 7,500 multiply by 80% is my cost. So how much? 6,000. 6,000. Listen carefully. 6,000. So how I calculate the return? Return in percentage. Please understand. Return in percentage. How I will calculate the return in percentage? Return divided by investment. Yes or no? Return divided by investment. Now return what I am taking in the numerator is what? After tax. So return divided by investment. PAT. PAT is how much? 3,000. 3,000 divide by 6,000 into 100. Answer is what? 50%. Return, please understand, return after tax. Return after tax is equals to 50%. Okay, and how much was the required return? Check. Required rate of return, RRR. Required rate of return, RRR, is equals to 40%. So my return is more than the required rate of return. Correct? So obviously we should extend the credit. Are you understanding? Obviously we should extend the credit. My return generated is 50%. Okay, and required rate of return is 40%. Any question? Okay. Now some people, huh? Where is 10%? Huh? He is saying 10% is profit. Is it correct? Huh? 10% is the extra return, more than what you were required. Your profit percentage is how much? Profit percentage is how much? 50%. 50% is return what you are generating. Now some people will say, sir, you instantly change the format. Okay, and you try to calculate in a different way. Listen, alternatively, same way I will go. Increase in debtors balance. This is what we used to do. Additional sales, increase in debtors balance, right now? Our format. Okay. Increase in debtors balance. How much? 7,500. That is what we calculated. Then what we used to calculate after debtors balance? Investment. Increase in investment. How much? 6,000. That is 7,500 into 1.5 by 12. Correct? So I used to close the window. Right? I used to calculate additional contribution. Do you agree? Additional contribution was how much? How much? What? Array, sorry. I wrote the above calculation. This thing. 7.5, 7,500 into 80%. Okay, 80% is how much? 6,000. Additional contribution. How much is my sales? 60,000 into how much? 20%. How much? 12,000. Okay. From this, what we is to minus? Additional bad debts. Bad debts. 60,000 multiplied by how much? 10% will be how much? 6,000. 6,000. So I used to get net additional contribution, right? Net contribution, that is PBT. For our reference, it is PBT here. So this is how much? 6,000. Minus, listen, additional tax, because I want after tax. So additional tax I will write. Additional tax. How much is the tax rate? 50%. So it will be how much? 3,000. It will be how much? 3,000. So net additional PAT or contribution after tax will be 3,000. Do you agree? Minus, if you remember, from this contribution, additional contribution, what we used to minus? Additional cost, right? Additional cost, first is additional collection and fixed cost. It is not there. No collection, additional collection or fixed cost. Additional cost of investment, it is there. Additional cost of investment, understand. How much is my investment? How much is my investment? Anyone? 6,000. 6,000. What is my opportunity cost? 40%. My required rate of return, what I can get outside is 40%. So this is 2,400 minus. Do I have additional gain? Yes. Do I have additional gain? Yes. So what we should do? The decision will be same. Some can be solved in different way. One is that calculate the percentage return, compare it with the opportunity cost, one way, or like this. Is it clear? The final decision will be same. The conclusion would be the same. So we will write conclusion after this. Array, is it clear? Easy? Correct na? It can be handled. Okay. Please copy. Hey. Hmm. Yeah, they will be. So deduct it up before, na? If the fixed charges are given additional, before deduct it and then take the tax. Done. Can we write the conclusion? Conclusion. Since there is additional gain, since there is additional gain of rupees 600, of rupees 600, the, what was the this thing wording they used in the question? Let me check. Okay, you are required to pay income tax, also state. Yeah, you should accept the offer, that's it. So since there is an additional gain of rupees 600, the offer should be accepted. The offer should be accepted. The offer should be accepted. Since there is additional gain of rupees 600, the offer should be accepted. Done. Next. See in the question what they are saying. Also state the degree of risk of non-payment. Degree of risk of non-payment that you will be willing to assume if the required rate of return after tax is 30% or 20%. What does this mean? You have to calculate the additional bad debts. How much bad debts means risk can be taken by the company. Okay. If the required rate of return after tax is 30% and 20%. So this means what? Reverse calculation. Reverse calculation. What we did now, the reverse calculation of exactly of that. Okay. So how we will do? See, on your calculator, come on, take 6,000. 6,000 was the investment. 6,000 was what? Investment. Correct. On 6,000. On 6,000. Listen carefully. On 6,000. 40% was the required rate of return. 40% was the required rate of return after tax. So 6,000 into 40%. What I will get? Amount 2,400. What is that? PAT. 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 Profit after tax. Profit after tax. If I want 2,400 is PAT. What is PBT? Profit before tax. 4,800. 4,800. At given sales. At given sales, my contribution is how much? At the given sales, my additional contribution is how much? 12,000. 12,000. Correct. So 12,000 minus 4,800. Minus 4,800. 7,200 is the bad debts which I can tolerate. If I tolerate 7,000 bad debts in absolute terms, my return will be how much? 40%. Is it clear? Same way, if the required rate of return is 30% or 20%, then what will be that bad debts amount? Okay, that we have to calculate. Is it clear? So obviously 7,200 was in absolute terms. 7,200 on what sales? 60,000. So 7,200 divided by 60,000 into 100. What is the percentage of bad debts? 12%. Why I am discussing orally, you know? You should be able to visualize. You should be able to understand the sum before starting it. What we have to calculate? Back debts. We have to go in the reverse order. Investment is what? Investment is 6,000. On that, how much I need to earn? 40%. That means 40% of that. So that will be my profit after tax. I will calculate PBT. 12,000 is the contribution on the current level of sales. Okay. So I will get bad debts in amount. Then I will calculate bad debts in percentage terms in relation to sales. See, right. Number 2, B, do with me. Second part, degree of risk of non-payment. Calculation of risk tolerance level. Particulars. 40%, 30%, and 20%. Correct? 40%, 30%, 20%. Okay. Additional investment is 6,000, 6,000, 6,000. Let me give this number A. So B, required PAT will be what? A multiplied by required rate of return. A multiplied by required rate of return. A is 6,000 into 40%. How much? 2,400. 6,000 into 30%. 1,800. 1,200. In this PAT, what I will do? I will add tax. Tax is how much? 50%. So, will I calculate 50% on 2,400? Already the 50%. So 2,400 is 50% plus and 2,400 again 50%, means my PBT will be how much? My PBT will be 4,800. On this 4,800 we calculate 50%, right? I hope this much is clear. Okay, you should not have confusion in this. Here the tax will be 1,800. Here it will be 3,600. Here it will be 1,200. Here it will be 2,400. I am going in reverse order. From contribution, when I deduct the bad debts, what I get? PBT. From contribution, when I deduct the bad debts, additional contribution, that is PBT. See the format, correct? So in bad debts, in PBT, I will have to add the bad debts. I am going in reverse order. So add the bad debts. My contribution F was 12,000, keeping the level of sales same, 12,000. So what is the difference? Balancing amount is the bad debts amount. How much? Okay, next. Okay. See, understand, when my required rate of return is low, when it becomes low, obviously more I can take on the bad debts now. You understand? More losses I can take. Simple. If my required rate of return is more, if it is more, less bad debts I will take. Okay, less expenses I will take. So my profit increases. Is it clear? Understood? Just for an analysis, nothing to do with this thing. Only calculation is important. Okay, maximum percentage, degree of risk tolerance, maximum percentage degree of risk tolerance for non-payment, 7,200 upon, please remember, bad debts will be calculated on sales, not on contribution. Bad debts will be calculated on sales. So 7,200 divided by 60,000 into 100, how much? 12%. 8,400 divided by 60,000 into 100, how much? 14%. 9,600 divided by 60,000 into 100 will be how much? 16%. okay, will be 16%. Please copy.
To be continued.